Hey, it's Brenton. Hey, I know buyers right now are uber aware of interest rates. They are at a 23-year high, and the news media is constantly bringing it up. So, that somebody who's in the market to buy a home is likely following some of those rabbit trails online, which can have its good and its bad. When your clients start to bring up, well, I saw such and such a rate online, I want to kind of help to arm you with a couple of talking points. First of all, if the rates they saw online are from an online lender, then obviously they're for the purpose of marketing, and nobody's actually getting that interest rate. They'll create a pricing scenario that one in 100 people can actually qualify for, and then use that rate as the hook. Most people can see through that, but your advice there goes a long ways. Secondly, if the rates they're seeing online are a conglomerate of 30-year fixed rates, that's not very helpful of a number either, because that takes into account a VA loan, which VA loans are much better interest rates than conventional loans, but not everybody qualifies for that. FHA loans are usually a bit better interest rate than conventional loans, but then you have the 1.75% funding fee as well as lifetime PMI, things like that. USDA loans are usually better interest rates than conventional, but they don't apply to everybody based on location and income. So that combined 30-year fixed number is not very helpful because everybody's situation is a little bit different, and you can get whatever rate you want just depending on how much you want to pay for it. So I would again try to steer them toward the actual conversation. We know also that media is a for-profit business, and so they're sometimes going to take the highest average rate they can find, just because they believe more people will click the link just to read the drama. So again, you can be helpful in tempering your clients' expectations and getting them to an actual conversation with a local lender. The bottom line: none of those online sources, whether they're online lenders or news media, are interested in helping your clients manage the largest debt of their life in a way that creates long-term net wealth. That's where I come in. That conversation, that time that we take up front to get to know their situation, to understand the strength of their financial situation. Not everybody should be buying a house. The priority is having that emergency fund built, having funds to fall back on, having real financial health, and then absolutely buying a home is an incredibly wise financial decision in Southwest Missouri. We lend in 48 states, and I have a lot of clients elsewhere where honestly it's not a great time for them to buy a house right now based on their market. But here locally, absolutely, appreciation is still on the rise with homes. The buy-in is still relatively low compared to most cities in Middle America our size. And if you have an opportunity to buy a home and you're financially in good shape, absolutely you should buy a home. And we get into the how-to at that point, but it's really about, again, creating long-term net wealth for them and their family. And you can't just get that with a couple clicks of the button and push button get mortgage. And there's no value there. There's no advice there. And so we major more every day in the advice portion and being able to really look at somebody's situation and help them to understand the impact of that monthly payment on them, how that's going to feel, what that's going to look like, the long-term benefit of buying a home and owning a home, the appreciation, the equity, all those things. And we love that part of this deal. And so I just challenge you to continue to steward your people well. When they start to go down some of these rabbit trails online, get them to talk with us, and let's advise and steward our people as best we can. All right. Have a good day. See ya.